I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guy I don't have on near enough. He runs TFMetalsReport.com, and I've been having a lot of metals people on lately. And Bill Holter told me this off camera. He said, "Well, it's because we're at an inflection point. That's why your gut is just telling you something's up." And I think something is up, and that's why I have Craig Hemke on from TFMetalsReport.com. Craig Hemke, thanks for joining us today on
Greg, it's always a pleasure. Nice to see you again.
Nice to see you too. I want to start with the backdrop, not the geopolitical, because whatever geopolitical thing does happen in the future or the not so distant future or whatever, I want people to understand how shaky the backdrop of the economy is, and it's partly shaky because of what they did to make this last so long and wouldn't let there ever be a correction. The backdrop of the global economy, the U.S. economy, how good or bad is it?
Well, let's start with the U.S. economy, because most everything cues off of the U.S. because we have the world's reserve currency. You know, it was interesting in the days leading up to the election, Greg, we were all told that, if Hillary won, everything was going to be fine, but if Trump won, bar the door. And then immediately after Trump won, that whole narrative changed. And from really what seemed like from nowhere, this narrative starts being shoved down our collective throats by the bankers. And that's that now that Trump has won, there's going to be this massive infrastructure expansion that's going to maybe spend $1 trillion of new debt, and that's going to be great, and that's going to grow the economy, and that's going to force interest rates to go higher finally, and the Fed is going to be normalizing interest rates in their balance sheet, and all of this is going to make the dollar go stronger, and the stock market's going to go up, and this is easy. We can see this coming a mile away, and then this is what you have to. This is the way how you have to plan for 2017. Beginning in early January, on my site, we started calling this the generally accepted narrative for 2017 because everybody was following it. You couldn't turn on a news channel, you couldn't pick up a financial magazine, you couldn't open a financial website without hearing all about higher interest rates, strong dollar, big economic growth, infrastructure spending, all the tax cuts, everything else that Trump was going to do, as if it was just a fait accompli. We've been saying all along that over the course of 2017, it would become clear to everyone that this was going to fail. I've thought all along that that would lead to highs for the precious metals that would come in the fourth quarter of this year, unlike last year, and we're definitely trending that way. But in the short term, we're seeing that generally accepted narrative just crumble right before our eyes. On Friday, we're going to get the first guess of first quarter GDP here in the U.S. Right now, the projections are for it to be anywhere between 0.5% and 1% for growth. Now, last year, the year where the Fed finally started raising interest rates on a relatively consistent basis, we barely eked out 1.5% growth. And now in the first quarter of this year, we're looking at about 0.5% to maybe as much as 1%. Now, the Fed still says, oh no, that's not a problem. We're going to grow 3% annualized in 2017. Well, if we only do 0.5% in the first quarter, we got to do 3.8. We got to average 3.8 for the rest of the year to get to the Fed's target. Well, that's not going to happen. If we go back a couple Fridays ago, the March employment report was terrible, something like, 88,000 jobs. The latest other data, like on inflation, is coming in negative even, not just below expectations, but actually negative inflation again. And so this whole generally accepted narrative is crumbling. The other part of it was higher interest rates and a stronger dollar. The dollar's down 3 or 4% year to date, so that ain't working too well. And the idea of higher interest rates, yeah, the Fed has increased the very short end, the overnight rate, but everything from 2 years to 5 years to 10 years to 30 years in government securities are all down in interest rates. So all that they're accomplishing is a flattening of the yield curve, which is, anybody who's taken Econ 101 knows that's a precursor to recession. So this whole notion that, this is a layup, Trump's going to cut taxes, spend all this money, the economy's going to boom, it's going to be 1985 all over again, I just think is bunk. I've said that from the word go this year, and it continues to play out that way.
Yeah, so you think that the reason why the metals are going to go up in the end of the fourth quarter or in the fourth quarter, you think that the Fed will have to realize this, and those rate cuts, those rate hikes, which has only been a couple in 10 years, they're going to have to take those all off the table. They're going to have to start doing QE something, 5, whatever. What are we on now, 5? Or 4,
I guess
5?
that's what it would be, yeah.
I guess 5, and it's going to have to be overt, not covert. They're going to have to tell people they're doing something. Is that why you think that the metals are going up? Because everybody's going to come to the realization that, oh my gosh, the whole narrative is crumbled, the economy is sucking wind, and they're going to start printing money like crazy?
Actually, you can make the case either way, Greg. If you go back and look, the bottom to the bear market came the day after the Fed first hiked rates in December of 2015. The lows last year came the day after the Fed hiked rates for a second time. And it was higher, those lows were higher than they were in December 15. And then of course we got this third rate hike just last month, and gold put in a higher low again. So you could make the argument that actually, if the Fed is hiking rates because of like a stagflationary environment, that's good for gold. And we can go back and find a period of 2003 to 2007 where the Fed hiked rates 17 times and gold tripled over the course of those 5 years. Of course, we can all go back to 77 to 1980. That period of stagflation and malaise in the Carter years, and how gold was performing then. So you could say that, even if there is this inflationary, slow growth, low growth, no growth environment, that historically that's been very good for gold. But the other hand is, on the other side, it's also true. I mean, if we're to this point where nothing is working, and that's become clear to everyone as this narrative is crumbling, okay, well then the next move may very well be for more QE or more bond buying or something out of the Fed. I mean, maybe that's why they're hiking rates. A lot of folks have said they've got to hike rates now just so they can cut them again some point in the future, as if, everything was so booming when we were at zero, right? Anyway, at the end of the day, a lot of this belies what the Fed's ultimate motivations are. Because, we're told, and a lot of people think, that the Fed, the Federal Reserve System, is some, benevolent, altruistic organization that's, somehow a part of the federal government and is there just looking out for everybody and trying to help the best they can and create this positive environment for low unemployment and a little bit of inflation. And that's nothing could be further from the truth. You probably had G. Edward Griffin on. Anybody could go back and read his book that he wrote years ago called The Creature from Jekyll Island. And in there, you can find out real quick the origins of the Federal Reserve System. It was created by bankers, for bankers, and they operate on a daily basis, and the decisions they make are made to benefit their banks first and foremost. I mean, just now, in the last 2 or 3 days, all of a sudden we're hearing that the rate hike odds for June are soaring. I mean, they were down to about a 40% expectation of a June rate hike last week. Now all of a sudden it's 70% or more. Well, what has changed in the last couple of days? I mean, is it all of a sudden that, that booming GDP that we were talking about, or the employment report we were talking about, or suddenly the onset of inflation, which isn't the case either? No, none of that has changed. The only reason the Fed is hiking rates is because it somehow benefits their member banks. Period. End of story. That's why they do what they do. And so, we'll see, as we go through the year, what kind of policy steps the Fed makes. But I just think that as the metals trade, it's going to be a function of this crumbling narrative. And as the narrative for this year crumbles and people realize the dollar's not getting stronger and interest rates aren't going higher, that's a positive for gold and silver in all its forms. And rather than seeing a high in prices in the second quarter, as we did last year, we'll probably see a high in prices in the fourth quarter this year as this whole Trumpflation dream unravels.
And are we going to have a problem? I mean, the real problem, the real Achilles heel are the bonds. And like Puerto Rico, they just stopped paying them, and which is not a very big news story on the Financial Channel. $70 billion in default. They're not calling it a default, I know. But $70 billion, $72 billion, I don't know, whatever it is, and with their bonds, they're not paying. When this all winds down, if you have less cash flow, you have less money for debt payments, and doesn't that mean the whole bond complex gets into trouble?
Everything, exactly. That's why there's this notion that somehow, after driving interest rates to basically zero, you had zero in the short end, and you had 1.5% to 2% at the 10-year, and somewhere around 2.25 on the long bond, that there was this notion that, well, now rates are going to go back higher and everything's going to go back to normal, whatever that is. Well, okay, fine, but remember what we're dealing with here is the government debt and the government financing of its existing debt and ongoing deficits through deficit spending, through the creation of more debt. Well, the only way they've been able to control the budget, specifically the part of the budget that is interest on the national debt, is to take the existing debt and shorten its maturity as much as possible, because most folks know at the shorter end of the maturity is lower interest rates, and the farther you go out, the higher interest rates you get. And so what the Treasury Department has done is they've shoved the vast majority of this outstanding U.S. debt into the shortest possible maturities that we can get, so they can have on it the lowest possible interest rate. By doing so, that component of the budget, and we're finally having a budget again after 8 years of Obama, but that component of the budget that is a line item for interest on the national debt has actually gone sideways, been flat for the last 6 or 7 years. The debt has continued to grow and the deficits have compounded, but the interest has gone down because the interest paid has gone down because the interest rate has gone down. But if I don't know, the 10-year long bond or the 10-year note goes back to 4% or 6%, or if the long bond goes back to 6% or 8%, that line item on the federal deficit would go from $350 billion a year to $700 billion to $1.1 trillion. And the entire scheme just implodes upon itself. And so again, there's some mathematical simplicity, some mathematical certainty that just tells you that this generally accepted narrative, as we call it, is bunk. That things aren't going back to what everybody perceives as normal. But see, that's not what you're told. Financial media doesn't tell you that because their main advertisers and sponsors are the banks. And the banks want this story told that everything is just fine and everything's hunky-dory, because the banks not only do they collect interest on every loan on money they create from thin air, but they all have their trading desks, like JP Morgan, which goes 5 years with only 2 negative days over the course of 5 years, where they make money every single day with their proprietary trading. Everybody wants this dance to continue, and that's why you're continually told the story that, oh, it's right around the corner, Greg. Oh yeah, things are any day now. It's just things are going to get better, and it's not a mathematical possibility that it will.
So under that backdrop of a pretty weak economy that's being propped up and rigged, the Federal Reserve has a trading desk. Right. Jello. And so, and there is an entity that can print money and trade, tin, silver, gold,
right,
wheat, corn, oil, forex, whatever. So
right,
under this backdrop, here the president's had some pretty weird meetings, that he's had. Today he's got a bunch of senators coming up. He's got some other meetings coming up. All North Korea, they're doing live fire drills. This is what happens if we get into a war with this kind of a backdrop.
Greg, this is no joking matter, man. This has been a major concern of mine for years, and I think most people, but a lot of times, we think everybody gets all worked up and they think, oh boy, this could really be bad. And then in the end, it's just saber rattling, and the Norks are trying to make as much noise as possible so they can get some big shipment of wheat or, something to mollify their starving masses, right? Well, I'll tell you something interesting that I recall, and I think I recall this correctly. That Bill O'Reilly had this kind of tradition that he developed at Fox News where he would interview the president, remember, on Super Bowl Sunday?
Yeah.
And it was all through the Obama years he would do this, especially if Fox had the Super Bowl. And like an hour or two before the game kicked off, you'd have this 20-minute interview of O'Reilly with the president. And I think, if my memory serves me right, it was during that interview this year. Now, Trump had only been in office for like 10 days at that point, something like that. And in O'Reilly's interview of Trump, he asked him, kind of off the cuff, hey, what did you and Obama talk about on the way over to the Capitol for the inauguration? And Trump, again, if I'm remembering this right, I think this was the interview. Trump said, well, I asked him, what is his most pressing concern? What's the thing that bothers him the most, frightens him the most, whatever, as he leaves office? And Trump alluded to expecting him to say, the Middle East, something, Iran and their nuclear program or something like that. And Trump said, what he told me was something completely unexpected. I wasn't thinking about this country at all. And O'Reilly at the time, and I think anybody that watched that interview thought, North Korea? Could he be talking about North Korea? And so I look at this now. I see Trump as this as the CEO that he has always been. And anybody that studies the markets or, as a financial analyst, a lot of times there are mergers or new CEOs come to a company. And the first thing they want to do as they're taking over their new company is to kind of fix all the screw ups that they're inheriting, because, they want to put their own stamp on it. And so I think Trump is looking at this and he's thinking, I'm not going to let this North Korea thing hang over my head for 4 years or 8 years. And something bad's not going to happen on my watch. And as soon as his domestic agenda stalled, as soon as healthcare, got tabled and, they're not going to be tax cuts this year and this infrastructure spending is, off the boards at this point, I think he said, you know what, I'm going to take care of some of this international stuff right now instead. And this is truly frightening stuff. I mean, there are, 20 million people that live in Seoul? And the North Koreans have had 60 years to fortify positions with artillery, guns, and all that kind of stuff. If anything happens to start the shooting over there. They just got all these guys on the DMZ. If one just fires up a stray bullet and then all of a sudden everybody's shooting, man, you're not going to be able to take out all of those fortified positions, in one day's worth of bombing raids. And like I said, you got 20 million people within range of North Korean artillery. I mean, we're talking potential loss of life on a scale we haven't seen since World War II. And so this is nothing to be excited about. Yeah, hey, gold might go up. Hey, that's the last thing that's not why or how we'd want gold to go up. This is a frightening situation. Like you said, there's 3 events this week. Only one of them I've ever seen happen before. The first event was yesterday, where Trump invited the UN ambassadors of every country that sits on the UN Security Council to come to the White House for lunch. I've been around, I'm 51, I've never seen that happen before. And then it's either today, Tuesday, or tomorrow, Wednesday, Trump is having all 100 U.S. senators come to the White House for a briefing from Trump, Mattis, the Secretary of Defense, Tillerson, the Secretary of State, the head of the Joint Chiefs, and I can't even remember who the other cat was. And they're having all 100 senators. I remember in the run-up to the second Gulf War, you might have the Armed Services Committee over, for a briefing or something, but never all 100 senators. And then lastly, the one thing I have seen before, and almost everybody will remember this. Remember when Colin Powell went to the UN?
Yeah.
Chaired that meeting of the Security Council, and he had his little, his posters of the trailers, and he had his little white vial that was supposedly chemical weapons and all that stuff. And
just before we invaded.
Well, guess what? Tillerson, Secretary of State Tillerson, is chairing a meeting of the Security Council, I believe, on Friday. So this is concerning. Let's put it that way. I mean, it may all just be blustery. God help us. Let's pray it is, Greg. But this is something that everybody needs to have a plan. You don't know how this could evolve. When the government has always told us, it'd be ready, that ready.gov or whatever, you're supposed to have a plan, you're supposed to have a central meeting place, you're supposed to know where you're relevant. I mean, seriously, this would be a time, prudence would demand, everybody listening to us, that this is a time you might review that kind of stuff just in case.
And might I remind everybody of your famous quote that in the pre-interview, I said, you had famously said to me, you can only predict the end of the world one time. Well, this wouldn't be maybe the end of the world, but it could be one heck of a hiccup, couldn't it?
Oh, my gosh. Yeah, and Greg, and as you mentioned, these markets are quite literally held together by, let's call it, electronic baling wire and digital chewing gum. I mean, look, prior to 2008, there was computer trading, and there was computer trading, excuse my French, all the way back in the 1980s. A lot of computer trading and what they called portfolio insurance. Some of that was blamed on the calamity of Black Monday in 1987. There's always been computer program trading, but now the vast majority, especially in the stock market, 85% of the daily volume is just simple high-frequency trading, computers swapping positions back and forth, not only in individual equities, but on the things that drive the overall buying. That's the index futures. Well, all of those computers are programmed to take cues, input cues that drive the algorithms. Well, if the computer sees this and X happen and Y happen at the same time, that means we got to buy some E-mini S&P futures. But if Z happens and A happens at the same time, then we're going to sell. These algorithmic computers are programmed that way, obviously, and it's a gross simplification. But there are two key inputs that all of these computers seem to have that help them determine buy or sell decisions of stock index futures. Those two key inputs are the VIX index, the VIX, the volatility index, changes to that up or down, and then the dollar yen, the specific forex pair of the US dollar versus the Japanese yen. And if the VIX is going down and the dollar yen is going up, then every computer in the world, it seems, buys US equity futures, and up goes the stock market, like it did yesterday and again here today on Tuesday. And the converse is true. The dollar yen's going down and the VIX is going up. Everybody's selling their stocks and their stock futures. Well, the central banks have figured this out. Everybody says, well, the central banks, they can't manipulate the stock market. They're not going to print 10 trillion euros and $10 trillion and be out there buying Google. No, they get the computers to do it for them. And how do they do that? They get the computers to move because the central banks can control the inputs. So you get a central bank like the Bank of Japan to be buying the dollar yen all day. Anybody can pull up a chart, and we're talking on Tuesday, pull up today's dollar yen. It's up 1.5 on this steady gradual increase. That has prompted computers to buy stock futures all day long. And the VIX is another one. Hey, Greg, do you realize back on Monday, the VIX index declined for the largest move in 6 years? 6 years. What happened? What the hell happened on Monday that would make volatility collapse the most in 6 years? Nothing. But if you want the stock market to go up in response to the French election and everything else that's going on, then you sell some VIX futures, you buy the dollar yen, and the computers do all the heavy lifting for you. Look, I'm sure there's a lot of people listening to us going, this guy's nuts. I mean, is that gray in his hair or is that the tinfoil on his head? I can't quite tell. Look, I'm just telling you, that's how these markets operate. You're told by the financial media and by your stockbroker and by the bank analysts that a market actually exists, that there's people in there buying and selling stocks off of fundamentals and all this kind of jazz, because all of those people telling you that have a vested interest in propping up the system and making it continue. What I'm telling you is how it actually works, how it really works. And so when you see this disconnect between economic reality, the hardly anybody working, the record amount of people not in the labor force, the minuscule amount of growth, but yet the stock market's 21,000? That's how all the pieces fit together, Greg. And so putting this all back together, when we talk about geopolitical risks that could upset the apple cart, when the system is already simply held together, in a binary fashion of zeros and ones, the whole thing can be brought down pretty quick.
Yeah, so if we have some sort of a Syrian attack, where they send, 59 missiles into North Korea to knock out their nuclear program, or they, heaven forbid, sink one of our ships or torpedo and luck out and hit one of our aircraft carriers. We probably have a couple of different carrier groups. We have at least one over there. Something like that. And
Gulf of Tonkin.
Well, whatever. Something like that could lead to at least a regional conflict,
right.
Not the end of the world, but a pretty major one. And then we don't know what the North Koreans have a sub or two off the west coast, and they take a shot at Silicon Valley. Even if they're unsuccessful, what do you think would happen to the market the way it is right now?
Oh my gosh, Greg! And again, I can't even imagine a scenario where just on speculation in the future, we're just going to preemptively attack North Korea. Because the potential loss of life on the peninsula, in Japan, all the surrounding areas, and really, I guess, all the way to if they do have a missile, all the way to Hawaii, Alaska, and the potential loss of life is, as I said, at a level not seen since World War II. And so for the U.S. just to wade in there and start launching cruise missiles, or to shoot down North Korean missile test and then cause this whole conflagration, I think it would be incredibly irresponsible. And I can't see that happening. However, what I can see happening, unfortunately, again, is what has happened in the past. Whether it was the sinking, what was it, the sinking of the Maine in Manila Bay, right, that set off the Spanish-American War? Am I getting my history right? Was it the Gulf of Tonkin and the Gulf of Tonkin resolution that increased our involvement in Vietnam? Was it 9/11, which got everything going into Afghanistan, and we're still involved in the Middle East and all these different places 15 years later? Yeah, what if the North Koreans, dare say, some other kind of false flag thing, but what if the North Koreans, just something happens and it escalates? What if they shoot off a missile and it hits one of our ships that's in the region? What if somebody just opens fire across the DMZ and then all hell breaks loose? It's really a very frightening scenario. And I honestly, I pray. I've been praying daily that peace holds and this all begins to stand down.
I've been saying for a long time that if we get into a major, even a regional shooting war, the economy is so weak it just crumbles.
Right.
It just goes. We get a war, we get the economy. People say, well, they'll take you to war before it crumbles. Well, maybe they take us to war and then it crumbles. I don't know.
Right.
Am I getting that right? Is that what you think would happen?
No, that's right. And the way everything's connected, Greg, it's there used to not be the fear of nuclear war between the U.S. and the Soviets because of mutually assured destruction. And in the 25 years since the end of the first Cold War, we've kind of operated and kind of woven ourselves together with the rest of the world in kind of a mutually assured economic destruction. And so, when you talk about a regional conflict like that, and a couple million people dead in Seoul or something, the ripples of that would not just be confined to the Far East.
The derivative market would just implode. You'd have massive famine, you'd have massive store closings, the whole global. Imagine. Wouldn't the global economy just boing? Jim Rickards is talking about Ice 9. Everything would freeze. He's saying that the powers that be, the Fed, they're planning on everything freezing up. Would everything freeze up in a big shooting war?
I can't imagine that it wouldn't. Now, freeze up to the point of maybe markets are closed for a couple of days. A lot of
maybe a couple of weeks.
Recently, as what was it, August of 2014? Is that when? August 2014 or 2015, when the markets had been down the whole prior week, and then on that Monday, I think it was August the 14th, they were reopened down like 1,000 points, and the only thing that stopped it were all of the trading curbs that kicked in when individual issues were down more than 5%. So you'd get a lot of markets not even opening for a certain period of time. Greg, I don't even like to think about it. It's all, it's like they talk about the.
It's because it's what I'm saying is, I'll bring up the point that you just described how the program trading, the computers are trading, that everything is held up by electronic baling wire. This is the backdrop of what we get in the next war. A very weak system. Everything just freezes, does it not, in your expert opinion?
Yeah, that's what people are concerned about. And that's actually, without, again, making it sound like you've got to be some doomsday type, with a silo full of canned goods to believe this kind of stuff. But that's all part of the reason, one of the reasons why people own precious metal, physical precious metal, and store it in some nearby location, some bolted down safe in their basement or something. Because it's nice to have some gold coins around if you need them, but it might be particularly nice to have some silver coins around, because you just don't. I don't even like to speculate on this stuff, because, like you said, we can, as Art Cashin always used to say, you don't want to go around predicting the end of the world because you're only going to be right once. But this is some seriously scary stuff, and I gotta figure, again, these guys aren't stupid. Trump may be whatever he is, but he's surrounded by. I would think, competent, sane individuals that are giving him competent, sane advice. But what I worry about is with the rhetoric being pushed to such an extreme level, just the smallest thing becomes an Arch Ferdinand moment. And the unknown, what did Rumsfeld call it? The unknown, the known unknowns and the unknown unknowns, right? The unforeseen consequences of military action, you just don't know. And like I said, I would normally just write this stuff off, and I've been trying to feel better about things for the last couple of weeks. But these meetings that are taking place this week are so extraordinary and unusual, and I've never seen it happen before. That it leaves me scratching my furry little chin here, and kind of redoubling my efforts in prayer, whatever that's worth, that it doesn't get out of hand.
And coming from you, my friend, that is a very heartfelt warning with the backdrop you painted with the markets. And then we have this, the end of strategic patience is over. Isn't that what Tillerson called it? Yeah, something like that. Well, it looks like they're planning for the end of that patience to be over, but what do I know? Craig Hemke, thanks for joining us today on USAWatchdog.com. Of course, you have TFMetalsReport.com. You have a subscription page, is that right?
Yeah, I do. The most of the site is free, and I write 2 or 3 things every week that are free. In fact, I wrote something today that I'd like to ask everybody to read about how the silver market works and how the big banks create synthetic fake silver and treat it as if it's the real thing, so that because there's not enough silver in the world to meet investment demand, so they just create fake silver and call it the real thing so that the scales balance, that supply equals demand. Well, whatever. A lot of people don't understand that, and they think that the market is legitimate. So I encourage everybody to read that. It's a free article on my site, and like I said, I do a couple of those a week. But if you want daily analysis and podcasts that review the action and maybe give you some actionable ideas, yeah, it's $12 a month. It's just a fee to keep the lights on. But the main value of the site is the community. If anybody, I just invite anybody that's been listening to you and I today that thinks, yeah, you know what, these guys make some sense, and I need to find other people that talk sense. I need to surround myself with other people that see things the way I do. Well, that's what TF Metals Report is, and I encourage everybody to check it out, tfmetalsreport.com.
Craig Hemke, thanks for joining us today on USAWatchdog.com.
Always a pleasure, my friend.